Hi traders, welcome back to the Price Action Volume Trader channel. Today I'm going to make a video that I've been planning on doing for many weeks now since I released my TradingView footprint chart guide video. Remember, TradingView has finally released their own customized footprint indicator. However, as we're going to talk about later in the video, this is not a text-based footprint data indicator. And so we're going to see that it is calculated using different volume methods, but in the end, it is still an accurate representation and a good indicator that you can use if you do not have access or you do not want to use, a platform like NinjaTrader, Sierra Chart, Jigsaw, etc., other Atlas, other more professional platforms, then this would be your best bet, obviously, if you're TradingView users as well. Okay, so I'm just going to go into the charts and I'm going to talk about two different candles that we had last Friday. We just opened on Sunday night. This is the SP 500 futures, and we're going to talk about these two candles that I have highlighted over here, and we're going to analyze them in footprint, and I'm going to compare them between Sierra Chart and TradingView to show you what data each of them is showing and how you could have used this in order to have looked for trade opportunities. Okay, so I'm not going to go deep into the theory of how TradingView calculates the volume footprint indicator, but I'm just going to let you know where you can read this, because if not, the video would get very long. But just down here on the bottom right, you can see it because I have this bar here. Let me just move this bar a little. So if I take off this gray bar here, you can see right there in the corner there's that little question mark. So if you hit that question mark, you're going to go into their how can we help their support area, and so you just put footprint search, and then right here the first result that says volume footprint chart, you're going to click that, and this is going to take you into TradingView's complete information on the indicator. Okay, and the only part that I'm going to talk about here is this part here, which this is the most important. Volume data source. So this chart type retrieves some symbols volume data from several intrabar time frames, i.e. time frames lower than the charts for its historical calculations. Time frame gradually increases with the exhaustion of available historical data, starting with the lowest available time frame. In other words, the deeper into the chart's history, the higher the intraday time frame of volume data. The footprint for the chart's recent candles are the most precise since they use the more granular information in their calculations. And you can see the order by which the chart requests intrabar time frames for a calculation. It starts as little as 1 second, and then it starts increasing into the minutes, ending up in the daily. Okay, and you can just go down and read the entire guide here. I'm not going to go over that here, but basically this is something that I wrote to them because I noticed one time I took a screenshot and I went back a week later to that same candle on the screenshot, and the numbers were totally different. And what happens is, as the historical data degrades, it starts going into higher time frames, and then it starts going to start giving you less accurate data. Now, that happens because TradingView is a cloud-based platform, and so that's the way I'm guessing they, save up on having to have all this data saved on their servers. Is just a quicker way to show it. When you have, for example, Sierra Chart, you're downloading all the tick historical data into your hard drive, and so you have accurate access to all the past data. So when you use footprint on TradingView, you want to make sure you're using it, live. You want to make sure you use it maximum like 1 day behind, or obviously if you're intraday trading, you're going to be using it live, because that's going to be using the 1 second volume data and is going to be the best representative of order flow and the most accurate. Okay, so that's why I picked here Friday session, because that is just the last session before where we are now. So this is still going to be pretty accurate. Okay, so I have TradingView here, and then over here I have Sierra chart, and I marked off the same candlesticks. This is a 5-minute candlestick chart, SP500. We're in the September 24 contract, and so right here you can see we had non-farm payrolls at 8:30, so we had that crazy candle there with those two big wicks. Then regular markets open. This is all-time high levels, by the way. We made an all-time high here on non-farm payroll. Then the market opened, little push, a retracement back into this lows right here from the overnight, the extended hours, and then we had a quick move up. You can see delta, cumulative volume delta, is highly aggressive buying, trending up. And then right here on this candle that I marked off, you can see we had a very nice divergence. We have a red close candle, and yet we have a positive delta candle here pushing up. So if we go into the footprint, this is a bid by ask footprint. I have a lot of content on this on my channel. You can just go into my channel page, search for footprint. There's a lot of theory, footprint, and order flow if you want to learn more in detail. I'm not going to go into the basics now. And also you can check out my order flow trading course as well for much more in-depth strategies and theory. Okay, but then you can see right here on this candle, what do we have here? This was the open of the regular trading hours, 9:30, and then we have right here, we have a delta of 1,054 contracts net positive. So the aggressive buyers executed orders to buy were 1,054 more than the sells, and yet we had a bearish closing candle. And also you can see we have some big buying here and buying imbalances right near the top of the wick here, and we closed down here. So there is some potential trapped buyers that were just FOMOing here on the top. Okay, so and then you can see this gives us a nice reaction to then go down again back into these lower levels from the extended market hours. So let's now go into TradingView's footprint and compare that with this. So if we go here, we're going to be looking at this candle, and right here we just select on the top here, it says volume footprint. Remember, you have to have a premium plan on TradingView to have access to the footprint indicator. And in Sierra chart, all you need is an advanced package. Obviously, a lot of other platforms have it, Atas, Jigsaw, Ninja, etc. And then here's the numbers for TradingView. So as you can see, let me try to put this side by side. Let me just resize this window just so we can see the numbers side by side. Okay, so you can see right there this same candle, and you can see the numbers are totally different, but yet the point of control, we have it at the same level. Right over here, this is the point of control of the candlestick. That means this is the area with the most traded volume of contracts. Pretty much just whatever has the biggest numbers added on the bid and the ask on either side. That's the total contracts traded at this tick level. And you can see on both of them, we have the same point of control. And then on top, you can see we did have some clean finish auctions with a 0 on the bid and the asks on either extreme. But then you can see the delta, positive 1054 on Sierra chart, positive 644 on TradingView, and then the total candle volume on Sierra chart, 7,893, and then on TradingView, 23,920. Okay, so numbers are very different, but the main thing is that both platforms had the same divergence showing, meaning that we had a positive delta at a significant swing high level. Remember, we're visiting this spike at new all-time highs from non-farm payrolls over here. And then we had the reaction, the divergence, and then the reaction down. Okay, so now let's go into this next one. This one was a even nicer signal. Why? Because you can see right here on this section, we had this previous area of resistance. Then we broke out. Then we came on a retest, and then we came on a second retest. And right over here, if we look at the cumulative delta, sellers started aggressively selling here, and yet price was holding and holding this swing low and not going down until eventually cumulative delta flipped as well. We broke this resistance and we continued just trending upwards. So you can also see we were forming a high volume node and we were coming down again into the bottom edge. So now let's go into the footprint on Sierra chart. And you can see it right here. We had a negative 805 delta, and yet we put in a positive green candlestick, revisiting again this low that we had tested first on this broken resistance, turn support, and then holding on again. And you can see we actually had more divergences here as well. Little green pin bar candles with more aggressive selling, and price is not going down. Same over here as well. Okay, but especially on this one. So now let's go into TradingView. Let me expand this first. And now let's move on to that area here. And again, this is, let me just mark off right here. Let me put in a rectangle. This is the same area we were looking at before. We had this over here. Resistance broken, tested as support here, pull back, push up, and then we come back down again over here. Okay? And we can actually see, I just noticed, okay, yeah, it's the same one. So now let's zoom in and let's put this side by side again. Okay. And there we have this candlestick. So you can see on TradingView, we had a delta minus 1,297. and then over here minus 805. The point of control is one tick lower on Sierra chart, and it's one tick higher on this. Now remember, TradingView uses CQG for their data. I have here Denali data feed with live CME data on Sierra chart. So, that's the difference in data feeds. This is definitely a more accurate for me data feed, in my opinion, using Denali on Sierra chart. TradingView uses CQG, but then you can see here, again, the numbers are all different, but the point of control was almost exactly the same. And then we had a divergence again on this one as well. Negative delta with a bullish candle coming back to retest the bottom edge of a high volume node, retesting a previous low, trapping aggressive traders down here near the bottom. You can see higher levels of selling on this bottom areas as well. Okay, and then if we go back just here, let me expand this, and then we talked about as well, you can see this other divergences that we had here, right here, this one and this one, both pin bar candles with negative deltas as well, indicating more trapped aggressive sellers, and price is not bucking down. Okay, so as you can see, the data, it's different based on how it is calculated between TradingView and other platforms, but the signals that we are getting are still accurate. So this is definitely something that you can use in your day trading, in the, I would say, especially the futures market, which is what I personally have used it in and what I've analyzed here and tested. And that's pretty much it. So hope you're having a great day. Again, make sure to subscribe, hit the thumbs up, help the channel keep growing, bringing you all this weekly content, and I'll see you in the next one. Take care.